Well, hello, folks. It's been a little while. I'm sorry. I needed a holiday mental health break, and I should have really posted about it more. I kept thinking I would get back to this show. I do have a good one for you, folks. So I will apologize outright here. Obviously, I'm pressed and perfect right now. I'm happy to get back on the air, but it was a rough month. Um, Personal stuff you probably don't care about, but I threw my back out. I had a friend pass away, and I spent my Christmas holidays fairly isolated. So it wasn't, and the market was pretty much just dying. So I'm like, no, I don't feel like making a video. I'm going to sound like Eeyore. I'm going to depress people, and I like to try and bring the enthusiasm and the hope. So what have I got for you today, folks? What are we going to look at? Well, oh man, things are changing. So geopolitically, right now, it does seem like China's pushing harder and harder towards collapse, and America's actually pulling away from China harder and harder. Not just so chip manufacturing, basically the whole new era of all the chips that need to go into military equipment and AI are going to be brought back home for manufacturing. So you're going to see effects to the Dow Jones and more collapse in China industry. Not that Evergrande didn't do it. We've definitely discussed the real estate taboo tomfoolery over in China with Evergrande just building entire ghost cities. There is a whole lot of bubble things popping, and apparently there is even another, was it Helby? Another exchange is pausing withdrawals, and it seems to be linking its way over to Grayscale right now. If Grayscale goes, we are going to see a lot more pain in the market, and that will be the definite hinge-pin in seeing our 11K and pray Bitcoin. So the markets are they are changing. I haven't done a video in a while, so we've got a lot to look at. Let's dive right in. And yes, I do primarily talk about Hex and Richard Hart products, but the Internet Money Wallet was designed for pulsechain. Pulsechain got delayed, but the wallet will work with any EVM chain. Their product is going forward waiting for pulsechain. So yes, it is sideways. Yes, I am an admin in that chat, so I have a biased opinion. I have received money for them, or from them, not for promoting, but I think a tip for my programming, because I helped them figure out the sacrifice calculator for their website and set some programming instructions. So regardless of why the money was received, you might as well just assume I have been paid and bribed to sell you IM. Okay, so take that grain of salt. And then, why did I get so excited about this? Well, let's see. It's over a year old now. And you see this green line, this lovely green line. This is the launch day. There was an accidental fat figure with the first launch, so it launched at the wrong price and they had to redistribute the liquidity. Oopsie doodle. They got that handled in the first couple minutes. It made that wick. But this is the chart. And the entire year that the market's been going down, I've been going, I'm not complaining because my portfolio isn't on fire. Like, yes, it's hurting because other assets are still getting hammered that I believe in. But this, because you guys know how I like my bottoms. And yeah, I bought in this range as well up here because I've been so excited about it. But then I bought bottoms. So my DCA is under this price. I'm in profit on this asset because it's only going up on this trend. And oh, where's the price right now? Right near the green line. Where does it normally go after that? Oh, up. During an entire bear market, it has not penetrated below that line. And this was the worst pull down where she didn't touch here, but down here she won't touch. She's starting to generate a new line of bullishness. And a new line of bullishness. Possibly, I'm hopeful, maybe too hopeful. Okay? But this project had an all-time high at the end of the bull market, like April. Like, it was like last little rattles while the first sack was going. But then it's made higher lows and higher highs consistently. But nobody wants to buy it. That's cute. That's all right. You don't have to. I will, and I'm happy about it. I'm happy about all this DCA time. Originally, I got a gift from somebody, $50 worth. That was 1.7 billion at the time. It's $83 for 1 billion right now. But yeah, at the time, $50 worth got me 1.7 billion. That's where I started back here, and that was a gift. Got me right into this. And then I'm like, oh, I'll never be able to have a huge amount or get into the top 100 wallet holders. But then something I didn't think would happen. This chart with the bear market didn't skyrocket, but it didn't crash. It just kept going up slowly. But considering everything else has been crashing consistently, I have been very happy to have something going up slowly, making up for the crashing and constantly dollar averaging down into that crashing. So now, with that said, off to the crashing, because you've missed out on another sacrifice phase. No more. It's gone. They raised a total of almost 2.5 million. 2.444. I love that number. 4. So, yeah. This we're Pulse Bitcoin not doing so good at the moment, but we'll see. We'll see. It's interesting because there's so much in Pulse Deutsch and Pulse, or the ASIC surrounding that. Like, look, it's again, oh yeah, we're choosing up. We're rejecting off the 200 average and moving up, confirming we are continuing a bull market. Because yes, another asset that I have in my wallet that I got for a free claim that I hate, and you should hold something that you hate, because go figure, I hate this. And it also is making my portfolio not on fire. And I got it for free claim, because I hold hex stakes. Hex stakers get free claims? Yes, they do. So even though the hex price has been going down, ouch, kabibble. But we'll talk about that a little more in a moment. Even though it's been going down, I've gotten plenty of benefits for being a holder, and even being a poor pleb. There have been coin launches like Texan Token and Poor Pleb. Now, Texan Token I liked, but I was so caught up in my own personal emotion. I don't know, I might have missed any claim on that. I have to see if the claim phase is still open. I'm a little behind. So I had a successful launch. Price is doing all right, and I am glad for it, because Crypto Heartbeat, he's got a passion and compassion for this community. I mean, I do not always see eye on his direct spiritual beliefs, but I respect his spirituality and the purity of it. He really comes from the altruistic side of his heart, I think. And, or at least comes off that way. And Rags to Riches, Rags is awesome. He's hilarious, and I had no idea we had the same sense of humor. I didn't mean to copy him with the sunglasses and the don't watch my stuff. And then I'm like, oh, someone else is doing that? Yeah, right. I'm like, see his stuff. I'm like, oh, God. We talked. We're cool about it. He knows I didn't do it to him on purpose. So, yeah, this is a great community. Nobody has given me crap about it. They just love the fact that I've come in and tried to do my best to help. So I love to continue being here to do what I can to help. And so, yes, while we've been waiting for pulsechain, we have had this activity. So before I really dive into crypto, which is how I started it, let's take a look at the markets. Get ready for Monday. All right. Basically, this is so strange. So this is the S&P. Now, this was the infamous June bottom. We created a lower low, but then continued to rally and lost the Santa rally. Basically, the Santa rally, the market always goes, we're going to have a higher close into Christmas to get our bonuses and all this stupid stuff, so they pump money in whether it's good to buy or not, and the prices do go up. It's a seasonal kind of messed up thing, but it's not a guarantee because it ran out of steam. The market was so bad. We had it crushed, but we are still up around this point. So over here, we get to February 2nd. Why do I care about February 2nd? Well, that's right where this mouse pointer is right now. And are you getting the idea of this trend to right where that mouse pointer is? February 2nd. Could we see a bull flag formation pull up, fighting along this resistance channel, and then crash out on the second because everyone wants to see the Fed turn around, and I'm pretty sure the Fed is going to hit with another 50 before they go Davis and start cutting down to 25s. I don't think the market's going to like that 50, and I think we're going to start heading into our final leg at that point. No guarantees, but we have absolutely no real reversal signals. If you look at the 200 moving average, it's still curling down. The 100 is nowhere near moving to cross it. We are under the MACD with red impressions on the Instagram. Although the RSI is cropping up, you can see it's not like when the RSI is going up, you want to see a faster range. It's consolidating while the RSI is going up. You're more likely to lose steam and drop once the RSI starts to drop back down. We'll see how the week plays out. There's some financial things we can look at the market watch and see what indicators we want to look at for the week. The NASDAQ also been taking donkey punches, trying to hold on to this level just below the June bottom. Again, if we start forming to the 2nd of February, maybe we can get up and touch that line again, basically indicating that this is shorting opportunities coming. The market is seeming like it's going to try and rally. Now, the Dow Jones, the industrial complex, the emerging markets, this pays massive dividends. So even when the price goes down, it's still kind of a more profitable index. In some ways, it's more the Warren Buffett style, I think. But it's indicating it's broken the resistance. And this is where the CHIP Act, other things where the money is getting laundered in that, but it is coming back into emerging markets, manufacturing. So infrastructure growth during the recession is the basically best thing to lead out of a recession. Now, buying indexes or whatever, you guys know I don't like stocks. I'm paying attention to the change of the market because the VIX should have exploded, but it has almost seemingly been repressed. There's also some rumors that JP Morgan may have been manipulating the VIX. Now, here's the big one. The Dixie chart, the dollar index, as I watched it rise and then fall under this lovely bull trend here. Let's make it nice and fat. We lost that. We're not coming back to test it. We're not going to try and reclaim. I really doubt. But we're not going to remove it just in case. Not yet. Going to extend this bull trend. So the test here is that we lost the upper bull trend, but this original bull trend, how much traction does the dollar have? And this is where if the Fed pushes another 50, if we start seeing some traction in a 50, we're coming to kiss this line, which means we can see the dollar between 108, 107, 106 very easily. I am feeling the shift, but like this is a nice rounding, but we're still going to slam off this line, I think. The reasoning is, again, the RSI is highly oversold and we're still below the MACD. But we do have, I don't know, we still have the 100-day over the 200-day, but we have the 50 and the 50 crushed under both. So momentum is losing. So this is where I think we're going to see another pop. I don't know how high to get. I really doubt it's going to get over this red line. If it does, it would still stay within the green channel. But I think we're going to crash out on that red line and then fall out of the green line. And that's going to be the path of the dollar. And so while it's going up, we're going to have more of a chance for another leg down. So this RSI may still need to correct down. We'll see if it consolidates as it does or if it drops in price. Tesla still highly overpriced. Now, I'm not sure exactly what happened here because I was pretty sure at 120, the margin calls for the collateralized debt of Tesla shares for the purchase of Twitter had a margin call. Now, Elon's been selling Tesla shares like a maniac. So I think he covered those margin calls, obviously, because we didn't see a mass sell-off from the margin call. So this slower sell-off into it is pretty much Elon. dropping from here to here. I don't know that for a fact, but he's been selling heavy this whole downtrend. So if he had not been selling heavy, it may still be above 169, but he's crapping on all the Tesla culties. And Tesla is still an overpriced souffle. It needs to fall between 90 to 70 to 65 here, minimum. This is where it should be valued at. I don't really feel like going into a huge discussion again on Tesla. I have talked about it. The amount of revenue they're generating for the market cap, if they went insolvent and closed, there's nowhere near enough assets to cover the market cap or the investors even get credited. It's way overvalued. That's the point. The revenue and the assets should cover the investors, the market cap. That's kind of how the valuation works. So we look at Apple, and Apple has finally lost the June bottom as well, trying to recapture it right now. Not looking good. We're maybe green impressions on the Instagram, but below the MACD average. The RSI is pushing up, but I think that was basically a heavy gamma squeeze Friday close to knock out all the shorts in the market and make some money back. Netflix still chugging along ever since it crashed to the June bottom. It's seen nothing but bull. Now, the 100 has crossed the 200, but the 200 is not curling up yet. So this still has room to get knocked hard during the next phase of the crash, because also the Netflix CEO is still not spending money wisely, and revenue reports are going to matter over this year. Now, as we head into Schmuckers, it's testing breaking the main channel. So let's take a look here, folks. This is Schmuckers. This is Schmuckers bull trend. Yes, the crypto bull market is alive, and it is Schmuckers Jam, the Schmuckers Company, and General Mills, and Lockheed Martin. Yeah, these are making all-time highs in the bear market because defense spending doesn't stop. Families still need to continue to put peanut butter and jam on sandwiches and cereal in bowls to feed their kids. So these companies have pricing power. Now, the end of the world is described by the collapse of the bond market because our dollars, our currency, are backed by bonds and treasuries. Without bonds and treasuries, the debt that backs the dollar is gone, and they are completely worthless. A crash and ending of the bond market would spell the end of the world. But as we look at the AGG, the aggregate, this was my long-standing line of resistance. It was cracked and held, and the bull trend set has started to pick up. This is indicating we're getting very close to a buy signal. It's above the moving average, and talking or thinking about switching to green Instagram impressions while the RSI is inclining, which indicates increasing purchasing. Buyer's market or seller's market as buying is happening. So bonds are correcting. I'm pretty sure once we get to over 101, we'll be seeing the 100 crossing the 200 out here by the middle of February. And bonds, as the market finally realizes what risk off means, the anomaly that has destroyed bonds this year will end for the meantime. And as the bond market recovers and the Dow Jones, likely stocks and commodities will crash. Tobacco and alcohol, great if you love those stocks. Now, I am not affiliated at all with this. Again, not huge into stocks and bonds, just tracking them to figure out what's going on. But this is the rotational on and rotational off ETF, designed by Michael A. Guyad. And this is junk on, junk off rotational bonds. These two bond indexes are created around mathematical algorithms that use statistical backtesting to figure out, under market conditions, what the safest play is. This is a safe money index. Of course, he started them right at the end of 2021 before the bond market started crashing with the stock market, which shouldn't happen. A year of hell for him. But basically indicating that the bond market has bottomed. This is a good thing. This also means if you are a stock person or bonds and want safe money, that Michael's Funds, you can find him on Twitter and figure out, I don't know if you need Robinhood or if you need to go through credit investing or what the deal is. But you want to find him on Twitter, I follow him. You can ask him about his funds through DM. He'll probably message very friendly about it. He puts a lot of effort into it, and his father did amazing lectures on TA. And thanks to him releasing one of those lectures on Christmas for free on Twitter, I got to view the whole thing and up my game a little bit, which is why I'm now tracking the 100, 200, 50, and 25-day moving averages. Information is useful. It is powerful. It is good to know what's going on, even if it can't predict everything. And Michael gives it away freely. I like him. He is worth a follow. I get a lot of good information from him. He's the one that turned me on to watching the lumber market as an indicator. Markets topped in 2021. This is usually followed by a crash 2 years later by the indicator that markets topped in lumber in 2006, the 2008 housing crash. Markets lost in 2021, the 23 housing crash, as the markets are starting to crash. Lumber is rounding, but I'm expecting a bottom between the levels of 295 and 211. Somewhere out by the end of the year. We'll see how lumber reacts. It has had quite a crash and correction. This should be highly alarming. So now tracking what lumber's doing while we track what gold's doing. So a lot of people think, well, if the dollar goes down, the gold should go up. And if the dollar goes up, gold should go down, theoretically, but they don't. Gold doesn't like to move unless he's sure. He calls bluff. BS, I don't believe you, dollar. You're just popping today. You're going to be down, or vice versa. So when you track lumber movement, so you have gold moving up while lumber's moving down. And this is more of a recessionary indicator. This is not great. Copper purchasing, normally an indicator of economy building. This is being artificially stimulated, I think, through China's purchasing program. So they are buying up massive amounts of copper like they're having an economic rush, but they're not. And this is not the indicator it should be for how we're doing infrastructure-wise. How many electronics are being made, how much housing wire. A lot of copper gets used for everything we make. Copper and lumber, housing and electronics. That's pretty much, the main of it. So I do also track nickel. Input cost for the lithium-ion batteries. I also track wheat futures ever since the crap in Ukraine. However, that's balanced out. It's not like we're not in a shortage, but somehow the money is not to be made anymore because future-wise, more and more wheat should be hitting the market, which means it's not a stranglehold a commodity anymore. So we're losing some of the pain in that. Now, tracking the oil. There's my chart. Now, even though we've fallen out of this bull trend, there's every chance that we're waiting for a colder shoot to winter, and natural gas is dropping. So far, this winter isn't being as cold as predicted, I think. This is a nasty drop. These drops in energy. Oh my. Shorting energy time, that is one of the final indicators, if it goes this way, for a recessionary theme. That it's done. The market's not going to try and have denial anymore. It admits it. Hands up. Now, with all that discussed, we see BNB climbing again, trying to hold on to its version of a bull trend throughout the year. BNB right now, Binance does not want to release any proof of reserves, is under investigation for several criminal activities. Go figure. And we're waiting to see whether, if Grayscale pops because of this latest exchange, will it take BNB with it? How bad it'll be. But we should be getting close to that final leg down, if it's coming. I was starting to think BNB might hold out. We might have shaken everything out, but another exchange is stopping. That's not good. That's a whole nother asset plate and a whole bunch more people affected. So Bitcoin chugging along here. Old man Bitcoin at this point, as far as technology is concerned. is not a lead indicator like gold. It follows along these days. It doesn't care about any of these trends as far it left, broke the resistance, and continued to move sideways. It doesn't care. It's waiting for something else to scream, market buy me, market buy me. And some more uncertainty around grayscale is not that event. Now, Ethereum. Oh my god. It's almost the exact same chart. Really? No. Yeah. No. Yeah. Little bit of an ROI change, but it's the exact same pattern. They're moving in lockstep. Nothing very interesting about that, which is why I come over to watch BNB. Now that at least has a little bit of difference. I think the two of them are following BNB here, and BNB is the lead indicator out of the networks. It's a little alarming to me because I don't trust BNB. If it crashes, everything else is going to crash. But she breaks through here. The market somehow gets a bit of a bull run. It might shore up enough balance sheets before crash actually needs to crash. I'm starting to get skeptical if we're going to get another leg down, only because the market, when everyone thinks they know an unknowable future, when everyone is shorting the market, it goes up. The market maker has to buy things and make it go up. Else it loses money. So it has to take those shorters' monies. Like, the more the market goes in one direction, it's a huge opportunity to take their money, making the market go the opposite direction. So the game is rigged, guys. And that's where I'm watching the stock market crash, wondering, like, we're already been in a recession. They were lying about job numbers. In Q2, they overstated jobs by 1 million, which means there was only 10,000. Which means the recession had started. Oh, we're not in a recession. 2 quarters of economic downturn. No. We have such a strong jobs market. They lied. They didn't have a job. The recession started in Q2. Technically 2 terms, so whatever Q3 would have been the mark of it. We're in a recession. The question's depression. And I'm starting to wonder if somehow, because everybody's so sure it's going down now, when all the TA analysts know it's going to crash, it might be time to buy. I'm not feeling it just yet. There's not the perfect unity of the market's effed. Once there is, that's buy time. And I don't feel that in the sentiment that I hear yet. So I watch these little assets. So we'll get into Hex. And here, with a little bit of life in BNB, you can see a little bit of spark in Hex and the recent rumors with pulsechain. Somebody's trying to make a rumor that maybe Richard will have an announcement for us tomorrow. We're still set for version 2B on here. But there have been regular updates to GitHub. So we might be getting our testnet. If we do, life in the old girl may pop even more. Right now, I didn't get hugely excited about this bottom because of where the market is and the indicators. I'm pretty sure this isn't a bull flag leading to another bull. This is almost a cup and handle reversal. Once we clear this red line, I will have more confirmation that we've got a buy signal. Normally I call out every single bottom. I was in depression. I did buy a little. I tweeted at, please hang on until Friday at this price. I think it was up here. And they're like, don't worry, dude. And then it got down here. So me and my bottoms, bought there, bought here. Like every time, like, no, that's, but here we go. Where are we going to land here? I'm not feeling bottom. I feel like we have to test closer to this line. I gotta see more this week. Gotta see more, and I gotta see it get past this red line. Then I get really excited, or hear the pulsechain news. And of course, Decky and Hedron and Icosa. Look at the similarity in those chart shapes. Isn't that amazing? Yeah, more similarity. Icosa. So, yeah, these are the basically perpetuals of Hex. They're built around Hex. So their price kind of moves with Hex. It's That is easy to report. Hex is the lead indicator for them, I do believe. And then, yeah, I hate Pulse D. And it keeps going up. So I admit that I own it, and it goes up. I don't tell anyone to buy it. I don't think you should buy it. I mean, the reason to have Pulse D is because you like Dogecoin. Okay, I don't like Dogecoin. I don't think there's anything useful with Dogecoin. A better Dogecoin. Weren't starting with good stuff to begin with, but you could burn it to get ASIC. Make an ASIC token instead of building an ASIC miner for Bitcoin. So the whole little system, it's kind of nifty. It's a nifty little toy. It feels like a Tamagotchi, something to play with. But there's value behind it. People are interested in it. I haven't sold it. I just keep watching it with my popcorn. And yeah, there's the Pulse Bitcoin price. So it's had some fluctuation. And we'll see if we finally drop and lose this and we find some new lows. I don't think we can get below 0, but send it to 0. I'll buy some then. Send it to 0. I don't know. I really don't know what's going on with this because, hey, they copied existing things that I don't think are that great and need improvement, but they improved them. Dropped them. It's kind of nifty. It is well-written code, but it's a toy. I like increase of utility. I like functionality to my investments, like the perpetuals, like getting almost the equivalent of bonds formed as investments of Hex. Like, that's brilliant. Love it. Another copy of Dogecoin, like at least it's not another Shiba something. So I don't know. We'll see what it does. Bitcoin has been getting kicked, the Pulse Bitcoin. So we'll see. It's funny. I may be mining some. So yes, I haven't bought any. I have not bought any, but I am mining it. And that's my look at the markets here. All right. Pulsechain might be coming soon, but we may have another leg down from crash material. So optimism, headwinds, and tailwinds sucking us down. So that is, tailwinds propelling us forward, headwinds are in our way. Whatever. I will get that slogan's correct. Dyslexia. Yeah, I'll work on it, folks. But this has been my watch. Is very closely eyeing the bond market to see stability there. Once there's some stability there, I feel like I'd be able to map out the next phase of the recession here a little bit better. So this is what I'm seeing. This is what I'm following. And basically 2023 is aiming up to be an excellent buying year. I am DCAing and accumulating powder on the side for some big buys when I see my bottoms. So I might even buy a bond just for the hell of it, a lark. I don't know. I like Michael. I just feel like I want to support his project. He tries really hard and he puts a lot of useful education out there. So that has been my show for this evening, folks. I will be back at you again with another one, at least in a week, probably next weekend, and do a little market update again. Thanks for bearing with me. Sorry for being so long, and thanks for making it to the end. Again, as always, you get a gold star. Till next time, stay frosty.